Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions. And in today's session, we are going to have the revision for the December 2023 part 2. Okay, so as promised that after every 5 sessions, we will be bringing a revision session for you all. So here is the revision session where we are going to discuss a few MCQs and we are going to cover the previous 5 sessions that we have understood. Okay, so good morning Ram, good morning Sorish, good morning Bhavna, and good morning to all of you. I hope you are preparing really well for the examination, and do give me a thumbs up if everything is audible, like everything is clear, I am clearly visible. Good morning Dhananjay. So it is so good to see you all after a long time, like it has been only a week, but it feels like a long time. So I'm taking the live session now, and today we are going to have the revision session for December 2023, that is part 2. Okay, so now before moving forward, do subscribe to the YouTube channel so that you continue getting these videos that are relevant from your exam point of view, as well as join our Telegram channel. Here you will get the PDF of the sessions. Okay, so I hope you all are prepared for today's revision session and you will not make any mistake. Okay, so the MCQs, the practice is very relevant, and so let's get started with the first MCQ. As you have seen in the recent pattern of the RBI Grade B, that even in the phase 1 there were very lengthy questions, so you have to continuously practice. Okay, so try to give the right answer of this question. So the question is regarding, as per the statement on developmental and regulatory policies that is released in December 2023 with the Monetary Policy Committee meeting. So this statement has been released. As per this statement, it has been said to encourage the use of UPI, the UPI transaction limit has been enhanced for specified categories. So now you have to tell me that which of the following statement is correct regarding the UPI transaction limits. Okay, so that you have to give yes. Sorish is saying C. Anyone else? Only Sorish knows the answer. Anyone else? Bhavna is also saying C. That means C is the right answer, and that is absolutely correct. Both Bhavna and Sorish has given the right answer. So see, the first statement is saying that the transaction limit for UPI is capped at 2 lakh. That is wrong. Okay, the UPI transaction limit is 1 lakh. Except a few categories, like for the capital markets, for the collections, for the credit card payments, loan repayments, for the insurance payments, the limit is 2 lakh. Okay, so the limit here should be 2 lakh and the limit here should be 1 lakh. Okay, so in December 2021, it was decided by the Reserve Bank of India that the transaction limit for the UPI payments for the retail direct scheme and for the IPO, initial public offering, subscriptions was increased to 5 lakh. So this is absolutely correct. Now it has been said that to encourage the use of UPI for the medical and the educational services, it is proposed to enhance the limit from 1 lakh to 5 lakh. So for all the transactions, all the UPI transaction except the capital markets, except the insurance payment, except the collections, there was the limit of 1 lakh. So for the medical and for the educational services also, the limit was 1 lakh. That has been increased to 5 lakh. So you have to be very clear with the limits, UPI transaction limit. So here only the second statement was correct. All the other statements, the first and third statements, are incorrect. Okay, so here C is the right answer. So C is the right answer here, and as we have already discussed about the limits, that the transaction limit of the UPI is capped at 1 lakh, and for the particular payments the limit is 2 lakh, for the IPO and for the retail direct scheme the limit is 5 lakh, for the medical and educational services the limit has been increased from 1 lakh to 5 lakh. Okay, so this is the idea. Now coming to the second question, try to answer this question, a very easy question. So this is a static based question from the current affairs, and these kind of questions we have seen in the RBI Grade B. In the NABARD Grade A also there was a question regarding the Monetary Policy Committee, there was a question regarding the CPI inflation and such. So such questions like these questions can come in the SEBI Grade A, the NABARD Grade A, as well as the RBI Grade B. So try to answer this question, that is regarding the Monetary Policy Committee. So recently the Monetary Policy Committee meeting has happened, and the SDF and MSF have remained unchanged with the repo rate. So which of the following statements is incorrect regarding the SDF, MSF and repo rate, that you have to tell me. So I am getting the answer D. So let's start from statement 1. The standing deposit facility, it is a collateral free liquidity absorption mechanism introduced by the Reserve Bank of India. So that is correct, because under the standing deposit facility, the RBI is taking the deposits from the banks without giving them any collateral. So it is a collateral free liquidity absorption mechanism where the RBI absorbs the liquidity from the banks by taking the deposits from the banks. So this is to absorb the excess liquidity from the banks by providing an interest payment. So the SDF rate is actually the rate that is paid by the RBI to the banks for the deposits that the RBI is taking from the banks. SDF is less than the repo rate by 25 basis point, that is correct. MSF is greater than the repo rate by 25 basis point, so that is also correct. Repo rate is the rate at which RBI lends money to commercial banks in the event of any shortfall that the bank is facing in exchange. So RBI is lending to the banks, okay, and the banks have to give a collateral to the RBI, that is usually the government securities. So the third statement is also correct. Now coming to the fourth statement, the current repo rate is 6.50%. Okay. The current SDF should be 6.25% because the SDF is less than the repo rate by 25 basis point, that means by 0.25%. So SDF should be 6.25% and MSF is 6.75% because the MSF is greater than the repo rate by 0.25%. Okay. So here the D is the right answer because we had to find the incorrect statement. So here we have already discussed about the SDF, repo rate and MSF rate. The SDF is less than the repo rate by 0.25% and MSF is greater than the repo rate by 0.25%. Okay. Now coming to the next question, that is regarding a very important report that has been released by the Reserve Bank of India, and in this report the highlights are very important. So you just had to be aware about what are the highlights of this report. Okay. So try to answer this question. That recently RBI has released the report titled State Finances, a Study of Budgets of 2023-24. Which of the following is the theme for the report? That you have to tell me. So here I am getting the answer B. Revenue dynamics and fiscal capacity of Indian states. So this is absolutely correct. The theme of the report is revenue dynamics and fiscal capacity of Indian states. Okay, that's why the B is the right answer. So we have completely discussed about the report. So the report has been released by the Reserve Bank of India. This is the theme of the report, and the report is the annual publication. This is an annual publication that is released by the Reserve Bank of India. So we have completely discussed about this report. The data that has been released in this report has been discussed. The highlights of this report have been discussed. Okay, so if you are not aware about this report, you can go and see this session. Now coming to the second question. So this question is purely based on data. Okay, especially the data that is related to the GDP, that is important. Okay, so here which of the following statements is incorrect regarding the report, that you have to find. So give yourself a minute, give yourself 30 seconds and try to read all the statements very carefully. Okay, so I'm getting the answer D. States envisage a continuation of prudent fiscal management for 2023-24 with the consolidated gross fiscal deficit. Now what the gross fiscal deficit or what is the fiscal deficit, that we have discussed in the session that I took regarding the report. Okay, this is budgeted. So the fiscal deficit is budgeted at 3.1% of the GDP for 2023-24. So that is correct. Okay, capital outlay is budgeted to increase by 42.6% in 2023-24 to 2.9% of the GDP. So that is also correct, that the capital expenditure is budgeted. It is in the budget that it will increase by 42.6% and it will be 2.9% of the GDP. States' total outstanding liabilities, that is the loans that they have taken that they have to return. So outstanding liabilities, that means the loan that they still have to return, are budgeted to fall to 27.6% of GDP for 2023-24 from the peak of 31% in 2020-21. So that is also correct. Internal estimates suggest that if all the state governments revert to the old pension scheme. Now what is the old pension scheme? What is the new pension scheme? This also we have discussed in the session. So if you have any conceptual like misunderstanding or the clarity is not there, so you can see the session. Here we are just revising the main points. Okay. So if the state governments are going to revert to OPS, old pension scheme from the new pension scheme, so what is going to happen, that the fiscal burden could be as high as 4.5 times that of NPS, with the additional burden reaching to 0.9% of the GDP annually by 2060. So this has been said by the RBI report. Okay, so here the D statement was incorrect, all the other statements were correct, and that's why, yes, very good, D is the right answer. Sharish, Bhavna, Akash, they have given the right answer. The D is the incorrect statement. So here we have discussed about the new pension scheme, old pension scheme. We have already discussed about the important data points, what is the meaning of the fiscal deficit and everything. Okay. So now coming to the next point, that is recently as announced by the RBI in the Statement on Developmental and Regulatory Policies. So this statement was released, in which many of the proposals were given by the Reserve Bank of India, that the Reserve Bank of India is going to bring many of the changes. So you have to tell me that out of these three statements, which of the statement is or are correct? Is or are correct? So that you have to tell me. So try to read the statements very carefully and try to give the right answer of this question. So I am getting the answer A. Okay. Both of them are saying A. Sorry, Shakash. So what is the problem with third statement? Why the third statement is wrong? Why the third statement is wrong? You have to tell me that. Okay, because the direct question can come that the fintech repository is proposed to be set up by who and who, by which date. So what is the problem in the third? Yes, very good. It is the RBIH. So the first statement is correct, that is, it has been decided to increase the limit. So RBI has proposed to increase the limit from 15,000 to 1,000 per transaction for the subscription. So this is for the auto pay or for the e-mandates, that the limit has increased from 15,000 to 1 lakh per transaction for the subscription to mutual funds, for the payment of insurance premiums, for the credit card bill payments categories. The limit for the auto pay for the e-mandates have been increased from 15,000 to 1 lakh for the other. So only for the three categories, for the subscription of mutual funds, for the payment of insurance premium, and for the credit card bills. Only for these three the limit has increased from 15,000 to 1 lakh. For all the other payments, the auto pay or e-mandate limit is 15,000 only. Okay. Second statement is also correct, that is RBI is working on establishing a cloud facility in the country itself for the financial sector to store all the data in the cloud facility, and this cloud facility will be set up and initially operated by the IFTAs, that is the wholly owned subsidiary of the Reserve Bank of India. Now fintech repository, which will consist of the fintech data, this is proposed to be set up, which will be operationalized by the Reserve Bank Innovation Hub. So it is not the the Reserve Bank Information Technology Private Limited, that is, it is not REBIT, but it is the RBIH, the Reserve Bank Innovation Hub, that is going to set up and operationalize the fintech repository in April 2024 or earlier. Okay, so here the first and second statements were correct. The third statement is wrong because it is the RBIS that is going to set up the fintech repository. So we have discussed completely about the e-mandates, about the auto pay facility, and about the limit that have been increased for the particular categories. We have also discussed about the fintech repository that will be operationalized by the Reserve Bank Innovation Hub in April 2024 or earlier. So all these news articles we have already discussed in length. Okay, so now coming to the next question. So now you have to tell me that which of the following statements is incorrect regarding retail direct schemes. So this is what you have to tell me. So we have discussed very important schemes of the Reserve Bank of India, the PIDF scheme, the Reserve Bank Integrated Ombudsman scheme, the retail direct scheme. We have also discussed the sovereign gold bond scheme of 2023-24. So all these sessions you can go and see. Okay, I'm getting the answer C. Okay. So Akash and Sorish, they are saying C. So that is correct. Okay. So starting from the first statement, Prime Minister Narendra Modi launched the innovative customer-centric retail direct scheme of the Reserve Bank of India on 12 November 2021. So this is correct that it was launched in November 2021. Under the scheme, individual retail investors, only the retail investors, they can open a gilt securities account with the Reserve Bank of India directly. That is also correct. Government securities for investment through the retail direct platform. So government securities in which the retail investors can invest through this gilt account with the Reserve Bank of India are the T-bills. They can invest in the treasury bills, they can invest in the dated government securities, as well as in the state development loans, as well as in the sovereign gold bonds. Okay. So this statement is incorrect. Non-resident retail investors, only the retail investors that are the non-resident, they are also eligible to invest in government securities under the Foreign Exchange Management Act 1999. They can open a RDG account. So non-resident retail investors, only the retail investors, they can open the RDG account. They can open the retail direct gilt account under the retail direct scheme. Okay, so it is retail direct scheme is only for the retail investors, and that's why non-resident retail investors, they are eligible to open a RDG account if they are eligible to invest in government securities under FEMA 1999. Okay, so this is also correct. Retail direct account involves no charge from the Reserve Bank of India, and it does not involve any intermediary. It is directly with the Reserve Bank of India. So only the C statement was incorrect, and that's why C is the right answer here. Okay, so in all of these government securities, the retail investors are able to invest. Okay, government treasury bills, government of India treasury bills, government of India dated securities, state development loans, and the sovereign gold bonds. So if you have any confusion regarding the retail direct scheme, you can go and see this session. This is the previous session only that you can follow. Okay. Now this is a homework question that you have to answer, that real GDP growth projection for 2023-24 is given at what percentage by the Monetary Policy Committee that has recently happened in December 2023. Okay, so this is a homework question that you have to answer. Now let me show you all the students that have given the right answer of the previous session question. So it is Kingshuk. Thank you, Nand Kumar. It is really good to see all these kind comments. Okay. Sorish has given the right answer, as well as Bhanu. Okay. Thank you, user. Akhil has given the right answer. Dinesh has given the right answer. Abhishek. Prathvin has given the right answer. Sifar, Shibanand. Harshit. VSSS. Bhavna. Abhay, Abhiman, Harshdeep, Gagan, Riya, Imtiaz, Anant, CVR, Rushi, Anuj, Kamal, Utkarsh, Ronak, Rajan, and Ankit, Shubham. So these are the students that have given the right answer, and whenever I give you any homework question, try to write it in the comment section only. And you can also, like, whenever you are writing, you should also write the answer in any of the apps. Okay, there are many apps through which you can get the answer evaluated also. So I will also try to see the students that have given the right answer of the descriptive question also, but you can also use any kind of app to evaluate your answer to see the grammatical errors. Okay, so these were the students that have given the right answer of the previous session, and it is so good to see that you people are following the sessions regularly, even though they are coming recorded or live, because that is what consistency is all about. Even though I am sick or even though I am at home, still I am sending the recorded session so that you people are not getting any kind of lag behind in your preparation. Okay, so you should also be very consistent in your preparation, as well as now the time has come. Okay, the exam happens in June, July, so the time is very near to the examination, so you have to be consistent now. You cannot lag behind. Okay, so this is the homework question. Sorry, I will see this, and I will also have to check this. Okay, so kindly write this query in the comment section, and after checking it, I will post the answer there. Okay, yes, you will get the PDF of the session, but the PDF of the session will be provided in the Telegram channel of EduTap. Now the link for the Telegram channel is given in the description box below. Okay, so the link for the Telegram channel is given in the description box below. So now there is a big announcement from EduTap that we have brought for you the comprehensive guidebook for RBI, NABARD and SEBI, so that through a single guidebook you can get all your common queries answered. Even if you want to know about the syllabus, the sources from where to prepare, even if you want to get the previous year questions, all of this is provided with the guidebook. So you can easily download the guidebook. The link is provided in the description box below, and this is made absolutely free of cost to save your time, to save your efforts. So you can easily download the guidebook. The link is provided in the description box below. Okay, yes, it is most probably 25k, but still I will check and I will keep you informed. Okay, so do comment down below the answer of the homework question as well as how many marks you have got out of 6. Okay, so if you have any query, you can also comment down below, or you can call us, you can mail us. So thank you very much and have a good day. If you have any query, you can comment down below. I will try to give you informed answers, or I will try to give you the short answers. Okay, so thank you very much. Have a good day, and you are most welcome, Sorish. You are most welcome, everyone. Have a good day.